As the government changes how it will measure unemployment in this country, finally, some good news to report on the job front. In our fourth story, with profits up and the market holding steady, American companies are adding jobs in Europe and Asia. 1.4 million jobs have been created overseas in the past year, compared to fewer than 1 million jobs domestically. And according to the Economic Policy Institute, if all those jobs had been added here, the unemployment rate would have dropped almost a full percentage point, from 9.8% to 8.9%. To further illustrate, researchers at the Asian Development Bank Institute break down the numbers. Let's say you buy an iPhone from Apple. Its wholesale price is about $179. About $61 goes to Japanese workers for making some of the parts, $30 to workers in Germany, and $23 to workers in South Korea for other parts, and $6 to Chinese workers for putting the iPhone together. After workers elsewhere around the world take their share, American workers, primarily researchers and designers, are left making $11 off that same iPhone for that same American company, Apple. This, as the Federal Bureau of Labor Statistics announces it will change how it evaluates long-term unemployment. Currently, the cap on how long a person is counted as being without a job is 2 years. But starting this Saturday, January 1st, the monthly jobs report will show how many people have been without jobs for up to 5 years. The change will not affect how the unemployment rate is calculated, but it will make figures more accurate. As one BLS spokesperson says, we realize more and more people are unemployed longer than 99 weeks, so we need to break it down further. But what about those forced into early retirement because they can't find a job? The Associated Press reporting that many baby boomers are headed for financial disaster because they have not adequately saved for retirement. With traditional pension plans being phased out, more boomers are relying on the stock market, as well as the price of their homes, which have dropped in value. In 2011, in just a few days from now, more than 10,000 boomers a day will turn 65, a rate that will continue for the next 19 years. Time now to call on Robert Reich, Labor Secretary in the Clinton administration, now professor at UC Berkeley's Goldman School of Public Policy and author of Aftershock, The Next Economy and America's Future. Great thanks for your time tonight.
Good evening, Sam.
Now, first, what are the implications of all these baby boomers retiring in terms of Social Security?
Well, Social Security does have enough money to pay for all of these baby boomers. After all, Social Security money comes out of the general fund. I used to be a trustee of the Social Security Trust Fund, and I can tell you, regardless of whatever happens, we have, as a nation, a duty, a law that says that Social Security is going to be paid.
And in fact, Alan Greenspan chaired a committee back in the 80s anticipating this demographic bump. Wasn't that right?
That's right. And one of the problems, Sam, is that so much money has been concentrated at the very top of the income ladder in recent years, much more than Alan Greenspan anticipated, that the cutoff of income to which Social Security payroll taxes are applicable actually is a little bit too low relative to what Social Security officially needs in order to maintain solvency. So probably one of the reforms we're going to see over the next few years, I hope not actually raising the age of eligibility. I hope it's actually raising the amount of income subject to Social Security taxes.
And when we're at a time where there's so many people in their 50s who are unemployed and may not be able to get back into the job market, I mean, it's unlikely to happen, but wouldn't it be a good idea to actually lower the eligibility for Social Security retirement?
It might be, Sam. In fact, a lot of people right now are saying that the eligibility age for Social Security retirement, given the depth of our continuing jobs recession, and that this jobs recession does continue, maybe should be lowered so that you create openings for younger people coming into the job market who right now don't have a chance because there are so many older people clogging up the pipes, as it were.
And so let's talk about these new parameters for long-term unemployment. Why doesn't it affect the unemployment rate?
Because the unemployment rate really is based upon how many people are actively looking for work at a given time, in a given month. And many people who have been unemployed for 2 years or more, they've given up. They essentially are too discouraged even to look for work, so they are not normally considered as part of that most recent figure, which was 9.8%. If you figured all of the people who are too discouraged to look for work, and many of them, again, have been unemployed for more than 2 years or 3 years, that 9.8% would be much higher.
And so what will counting those who have been jobless for longer than those 2 years tell us about the recovery? Will we see the recovery in those people, or are those people basically just out of the job market?
Well, hopefully those people will be back in the job market someday. But the longer you're out of the job market, the harder it is to get back into the job market, partly because employers are kind of suspicious. If somebody's been out a long time, what are you doing? What have you been doing? Also because some of the habits and some of the practices of being connected to the job market are lost after 2 or 3 or 4 years. Those people, though, being counted is very important because it gives us a much more accurate picture of how many people actually are out there unemployed for a long period of time, needing perhaps all sorts of assistance, like extended unemployment benefits. Yeah,
you wrote recently that history will record 2010 as the year Washington became business-friendly. That's not the conventional narrative. We're watching Obama trying to bend over backwards for business. Why do you see it differently?
Well, businesses actually did quite well in 2010. In fact, profitability has soared. The biggest American companies are now sitting on over $1 trillion worth of cash. Their profitability came mostly from selling abroad, selling into rapidly growing markets like China and India and Brazil, and also from keeping their American payrolls down or cutting their American payrolls directly. That means we're seeing a real disconnect for the first time, I think, ever in terms of a recovery, so-called recovery, a disconnect between corporate profits, which are going way up, and jobs, which are not going way up here in the United States.
And in fact, I mean, that's exactly, I mean, the fact that these businesses are sitting in all that money, tax cuts is not going to spur their hiring, right? I mean, what we need now is demand.
Exactly. I mean, supply-siders, people on the conservative right who say all we need is more tax cuts for the wealthy and for big corporations are not taking account of the fact that big corporations have as much money as they need. There is nothing constraining them in terms of hiring people, except for the fact they're worried there's not enough market. People don't have enough money in their pockets here in the United States to buy the goods and services that would justify more hiring.
Robert Reich, former Labor Secretary under President Clinton, many thanks for your time tonight.
Thanks, Sam.